The commodities sector continues to attract a lot of attention. Last week was a little bit for the worst because we saw the worst week in terms of performance since March. Weakness was led by the energy sector, where we have seen a very volatile couple of months in the crude oil market. Following the geopolitical spike last month when Hamas attacked Israel, we have since seen the prices drift lower. Market is starting to focus on demand, which is starting to show weakness. We're into the low demand season. We're also seeing the weather not being as cold as normal. That's reducing demand. So generally the crude oil market is under pressure. We're watching that $80 level in Brent, which is a key area for now. We're also watching perhaps some fresh action from OPEC in terms of supporting the price at these levels. So interesting week ahead there as well. Turning to the metal market, the attempt by the Chinese government to stimulate the economy has at least cushioned the weakness we've seen in industrial metals. But for now, that sector remains under some pressure. Last week we saw a big drop in palladium and platinum, and these are some we'll be watching also in the near future. Turning to precious metals, gold, as we all know, had a very, very strong rally last month based on geopolitical tensions in the Middle East. Since then, we've seen some profit taking. Again, gold is getting closer to some key levels of support, which is worth watching. But generally, the outlook for gold, in our opinion, remains supportive, given the fact that we will see interest rates start to come lower in the coming year, especially in the US, and that will provide some underlying support. But just in the short term, the market is somewhat concerned about the tone that we've seen recently from the US Central Bank, where they're still keeping the door open for additional hikes, and that's adding some downward pressure to the precious metal sector. Finally, I just want to highlight a divergence we're seeing between grains, which are corn, wheat and soybeans, and soft commodities, which is cocoa, coffee and sugar. In the last few months we've seen a big divergence. Grain prices have been falling due to ample production on the northern hemisphere this past summer, while we've seen some big rises in cocoa at a 45-year high, sugar at a 12-year high, basically because a lot of these are produced on the southern hemisphere, where there's currently some very dry weather conditions, which is impacting the crop outlook. So generally, as you can understand from this, a very volatile commodity sector. With so many things going on at the same time, you may want to drill a little bit deeper, and you can do that by taking a look at my weekly commodity update. I produce that every Friday, and you can find that in the description here. Thank you.